EMA's exponential moving averages, what we use here is 14, 50, 100, 200, and 800. Um, the color that we choose for them is for the 14, it's yellow. I call it mustard, as Steve Morrow calls them. But he uses different period of moving average. I use 14 for my mustard. I'll use 50, the red one, call it ketchup. 100 is the black, so it's, I don't have a name for it really. You can call it, I don't know, barbecue or something. The 200 is our mayo with the white color, and 800 is blueberry. So other things you can see is some lines I have here. In case you don't know, these are key level lines. The way we calculate them is 1000 from a round number to another. So let's say 1.70 to 1.60 is 1000 pip. And these round numbers are monthlies. And when you divide it, so let's say we put a Fibonacci on it, 50% Fibonacci gonna be your weekly. So it's 500 pip from, you know, the lower or the high top one. So in middle, it's weekly, and then divide them by 2, it's your quarters. That's daily. There is webinars about how I go exactly through how to put this on your charts, so you can find it on share media. So these lines, what it appears on them is price is very attractive to these lines somehow. As you can see in one of the highest time frames in weekly, you can see how markets comes all the way from a zone to just grab some orders from one line and then go all the way down, touch another one, and goes back. So we use them as a, you know, somewhere that just more confirmation for us. We don't use anything. We don't decide anything based by any tools. You're just gonna have a full understanding when it comes to the Forex market. So don't just look for, oh, I see price touched here, let me sell, or it's here, let me buy. You will figure it how we go through it. So recently, we've been so selective about our trades, and we had a lot of, thanks to Mark English, we had a lot improvement in our trading. And that's the reason I wanted to share this knowledge with you guys, because it's leveled up our trading, so most likely gonna do yours. So let's get started. As you can see, you know the weekly structure. The weekly structure, I go just quickly through one quick example. It's kind of what I like to call it pump and dump. That's what they do in a weekly cycle. They create a trend, break that trend, and just manipulate the people, as you already know. So that's happening in every day of this market. As you can see, Monday, Tuesday, Wednesday, then market make the high and then stopped right there. Why? So as you can see in here, market made this high, worked on it. So this session is not technical. It's a technical fundamental. I want you to have an understanding of what you see and kind of think about it, that what others think. The base things I want to tell you here, don't follow. That's the main thing. Do not follow anything, anybody. Just yourself. And don't follow retail traders when they're buying here and then there's no movement to the high. So you feel that's a trap. First touch, second touch, third touch. and they come back, go back one more time. So you see all these EMAs are giving a buy signal, but price is not moving anywhere. So this becomes an obvious resistance for the retail trader after 3 touch. So they start selling. What market does? Stop hunt them for 58 pip from here and 25 pip from our trap zone. That's where stop losses of retail trader is, right? So when everybody is buying, it's time for you to look for your M setup, which is in a midweek reversal. Okay, so that's how I find my trap zones. That's how I find when price is not breaking a high, I know that the move is done. But probably gonna think about how can I follow my trends. You gotta follow the trends, right? For me, I don't look at any of these candles for finding my trends. I get where my trend is going by my moving averages. So when my ketchup and mayo is crossing on 15 minutes time frame, or mustard and ketchup in 1 hour. These are just same, 50 and 200 on the 15 minutes is same as 14, 15, 1 hour. So when these two cross, I know where I'm buying or selling. So in here and in here as well. So when moving averages cross to the high, I'm buying. When moving average, these two particular one cross down, I'm selling. No other reason to do it. You gotta follow the trend, right? Here is your trend. Don't put these lines on them and say like, oh, I see an uptrend. You don't see anything. They don't let you see anything, literally. You gotta get it confirmed by average of prices cross each other. That's financially like makes sense that now price is going down, right? So now we are looking at sells. So you know that there is a ECR strategy. All of you are aware of it. ECR, which represents EMA cross retest. And what we do there is buy a sell candle and sell a buy candle. I'm sorry. Buy a sell candle and say a buy candle. So the reason is just to get the best available price that you can, you know. So if you wanna buy something, you try to buy it in the lowest price, and if you wanna sell something, you try to sell it, like you try to sell it at the highest price, right? So we have our cross right here, and you see that EMAs are being respected, all of them. Market, so this is a consolidation, right? I'm not in the market till 10 hours into the market. So I come here, I see, okay, market is in key level. It's making a very little M. Where is my confirmation? Where I enter? This little box. This little box right here. Why? So I'm here in the market, so I wait to see what market does near my monthly key level. That's a key area. For me, it's important to see price action on here. So I see that kind of M's happening here with respect to my EMA. So that's a low risk trade for me, just taking it from EMAs, I sell a buy candle below EMA and below the key level. And also, as you can see, it did go above the key level and rejected it. So that's a pretty good confirmation for me. So I sell right here after closing it. So, Brandon has a 10 pip stop loss. But he usually trades Euro or USD pairs. Actually, he trade everything with 10 pip stop loss. My bad. But for the GBP pairs, I go for 15 pip stop loss and 60 pip profit, which is pretty good. So you see that 60 pip profit with 20 pip stop loss right there. Did I even let the move, begin? Before the move begin, I'm out. Not that I get 60 pip. I'm just giving you an example that 20 pip stop loss to 60 is 1 to 3 risk to reward. And you get it within like first couple of candles. But you have a potential of, call it 150 pip in right here. I will show you guys my trades here, and I'll show you guys how I could keep them 357 pip, 400 pip, but I don't care. I'm a day trader. I get my daily pip. So choose your edge. You want to swing, then swing. But you can do both. When you have following the market maker trend right here, you have this sign, you're selling it, you can start here, hold it on the weekend. I don't recommend. It's up to you. I'm not giving you a miracle here. I'm just showing you what I'm doing. Trust me, I'm doing the great way that is possible. Go find everywhere, go study anybody that you want. You'll come back to these strategies. There's no way I agree that Dylan, Brandon, Mark English, they're all wasting their time. No, you're wasting your time if you're not listening. So let's get to it. Monday start, a gap, no problem. You start. By the way, since you're gonna see that we are trading traps. So I don't mind trading Monday because I love traps nowadays, right? So it's 10 hours in. I'm coming into the market. I see it's still going down, but I don't trust it anymore. I trust it here, next day after here. What I expect the market, they don't let everybody selling right here, but they're inducing them, giving them gap, giving them big ass red candles in the Asian session compared with the small, green candles, telling them to sell, respecting these EMAs, being below them. And one candle kill them. Where did candle goes? Oh, daily line. Okay, now I'm interested about it. All this here, I used to be interested, not anymore. So when a candle violate all the stop losses of these excited people selling it all through Sunday, Monday, one candle kill them. You see 100 moving average being stop haunted, M formation, and then a beautiful pin bar right here on my daily level. I sell right here on my daily level. Even, let me be honest with you, when I see market going down like this, I don't hesitate putting a pending order on my daily line to get activated and go. But it's up to you. So let's count the pip. 80 pip. Not bad for a day, but you could have hold it to next day from here to catch 150 pip. It's up to you. I'm out that day. So what I'm looking for it now, I got 150 pip there. I got 80 pip here. It's a new week. You see how after that I see the cross, EMAs are expanding. right? So after you took 2 trades, it's kind of obvious that it's going down. So what market needs to do? Come back up. They either come back to the EMAs or they change the trend. Till we don't see this cross, we're selling. Till we don't see this cross, we're selling. So we catch that, we catch this. So after this stop hunt happened after 8 hours into the day. Sorry, 10 hours. 10 hours to the day, I see that price is going down. I don't usually trust it, but you could have sell a buy candle here. I don't really do it anymore, but you could do it, or you wait for this stop hunt, which is not really good. But as you know, it's not a trade day every day. This is just one pair. We're gonna see how almost every day we can have a setup, but there is, other crosses that you can see exact same thing over and over on all of them. So in here, we have this W of here, of this low. So let me just adjust it a little bit. So when market came here, they moved it up. Okay, interesting. Market didn't break this, right? So we came to the next day, market came again to our Mayo, made an M. We are still selling. Market came to the EMA, stop hunt the people, made an M. Right here is a 40 pip move. And then here, second leg, it's another 39 pip move. We're still selling. We're still going by our structure. When we have this cross, we look for M's, no W. Well, we look for them. Why? Because when I see after this 40 pip, next day when I'm coming to the market, I see the EMAs are crossing, and I see the cross finally happens, means I'm going to uptrend now. That's just show me this was a peak formation low, right? I don't need to catch it. Why you want to go against the market maker trend when you can just not trade here, or trade these, or trade from here to here, or trade these 40 pip, 80 pip, another one? Just don't go against it. Market maker will beat you no matter what if you go against them. You buy here, you will die. That's it. So we come back here, we see the cross happening here, perfect. The cross happened right here. So you can have an ECR entry, whether on this, you're not happy about it. If it breaks, I'm not gonna be unhappy about it, because I know there is 50, 100, 800. You can count this a respectful retest to all of this. Why I don't do it here, but I do it here? Because I see market make the damage. They're gonna go up, and my weekly structure is telling me they've been down, it's time to go up. You see it? You gotta have the eyes to see it. Like, I can't do anything if you can't see this little game they will play. So if you can't see it, you're gonna be pissed, because you'll lose and you'll see, oh, that was it. I've been there recently. So we're gonna buy any of these sell candle after this cross. I know that you could have buy any of these, but because 14 and 50 EMAs on crossing, but I don't do it. 1 second, let me see what's up here. I see a chat popping up. I don't see a chat. No. Okay, can you guys, if you have question, please write it on Telegram. I don't have access to the chat here. Till you write it, I continue. So we're gonna buy here, let's say this candle that respected the 14.2 with my way. You're not gonna lose. You're gonna catch your pips, 60 pip right away. You can call it 120 pip, and we are still, as you can see, in the same day. I'm not swinging, but you can swing it from the same point I entered for 300 pip. Pretty good, huh? But that's gonna make you hold over weekend unless you close somewhere 280 pip something here, which is pretty smart. So that day finished, we go to the next day. Now you see price is above 800 or blueberry. So that's even more confirmation that they're taking the price up. EMA is expanding. You see these cross. I wait to see these EMAs expanding and then I enter. If you're live here, that's what you will see. The price is getting expanded from 800s. So you can enter on any of these. And then you see that they expand even more and more, right? I know in the live it's not gonna be as sweet as I'm showing you, but it's okay. So you remember, I'm gonna show you this. When a W is forming, they're gonna be stop haunted, and that's how they go over and over, right? That's a very famous move. So it's a W, V, V, M, A, and then whether W or different types. So I expect here after my W, they had a kind of V, and now they come up. I expect another one. So you see they're not giving you a W setup right here, but that's what I said. You don't follow a single setup. You don't look for M's and W particularly. You see everything. If it was an M or W, perfect. But now you know the structure, it's going up. And you can wait for price to come above the moving average of 800, or you can wait for a stop hunt. It's up to you. If you manage your risk, you can enter, multiple times. So 10 hour, you wake up, London opens, price is here. You wait for them to see what's happening. They're respecting EMAs. Of course, I don't trust it here. I trust when this happens. And you can whether enter here, as you see an engulfing candle on the moving average. Refer to, I really recommend everybody to read this book. Candlestick Bible. Refer to that book. My bad. Yeah, refer to this book. When price is making an engulfing in moving average like this or this, you can enter here, or you can wait for the retest. Me personally, whether here or here, I would enter the market. So let's be a little more patient and enter here with my always same stop loss, 15 pip. And you see 60 pip in the next retest. Before even next retest, you're out. If you have a goal like daily goal, or if you trail your stop That's, you can call it 120 something. It's Friday, let's call it 120. You're not greedy. So that's another one. We go to the next week. New week. What do we expect? We're still buying. What do we expect going up? Till where? I don't care. Till these two cross down and you see a potential peak high. That's it. Maybe like something happened and GBP cat gonna go up for 1 month. You're gonna keep trying to catch the reversal. Just follow the market maker, you know? So Monday start, 8 hours, they started in the monthly key level and then they comes below the moving averages. So what I wait for it when this happens, and especially a big move like this, and I don't see market comes to the Mayo for like 3 days, 2 days and a half. What happening? Mayo like need to be touched. So there we go. Mayo is coming. So it's really, you gotta lose couple of times like I did to don't enter here for a buy. When you see like Mayo is not being touched for sometimes, you know that they're gonna come and touch it. So it's okay if you lose couple of times here trying to catch this buy or catch this buy and didn't happen, and then later happen here. It's just you learn to be patient. It's okay to lose. And so in Tuesday, 10 hour, and you'll see that London breakout, and now you see how you can use everything that everybody teaches you. You see in here, I'm trading ECR of Brandon. Now I'm gonna show you a Tuesday reversal. There you go, Tuesday reversal, W off the low of the Monday, rised it up. Isn't it the Tuesday reversal we all aware? Yes, it is. But I'm just making it more clear for myself, by having this Mayo right here. W off my Mayo, I'm looking for a buy. It's Tuesday reversal. The more confirmation, I personally, the more leverage I go for it. Like if it's Tuesday reversal and it's on the Mayo and it's a W, I go like a 3-4 more position compared with this one. This is just what my South African mentor told me. He said, you have to risk depend on your setup. You don't have to risk based on money management. Like if you have a $10 account, don't risk 2%, 0.01 couple of trades to have like slowly growing it. Wait for the setup that you feel bad to miss it, which is this. Stop onto the Mayo Tuesday reversal, and then you risk more. And what do you get here? Let me just use my favorite thing here. That second leg, I'll buy this sell candle on the 800. W has been formed. Confirmation is done. Price is above the moving average, so I buy a sell candle. 60 pip right here till the monthly level and call it 100. Yep, call it 100 pip. As you already know, this goes far more than just 100 pips. But it's up to you. We might plan to have a swing as well in the next week, but we'll see what happens. 342 pip in course of like 3 days, 100 pips a day. But like I'm trying to teach you how to get 100 pip a day and just get out, Another one, next day, 8 hours, London session. Sorry, 10 hours. Keep saying it, 8 hours. And then a market, I'm looking for a buy. They comes here, kind of W, retest the 14. This is a good candle to buy it. That's a good sell candle to buy it. 15 pip, 60 pip, done. or hold it for the rest of the day for 180 pip. So we had 100 and 188, so far 288 out of these 300. So I'm not crazy to leave these pips away like for no reason. I'm just making myself more comfortable. This gonna help you later. You come to the market, make your salary in a day, and you go. You don't need, like, if you learn to make money out of swing, then you have to wait for a swing to make your money. But for me, if I learn this completely, then I know where I'm entering to the market, you know, like this. Like, how many hours is this? You know how limitless is Forex. So in 7 hours, I can make whatever amount of money a doctor dreams to make ever. So shout out to day trade. We move to the next week. So what happened here will interest me. Why? Because I see a cycle going up. Don't forget this. Don't forget this. That's what we expect, right? So in here, price stopped going up and then start testing it, not breaking it, which in here was just keep breaking it. Okay, interesting. That just tells me, seeing this doesn't tell me that look for a signature trade to trade it, or you're not gonna miss this huge. No, it's okay to miss this. I rather have a safety trade. So, but it's good that I know it, what's happening to the market. This tells me it's better to stop buying. Stop buying on this pair. Don't sell. You see, that's a difference. When you see this, it's not a sell sign. It's a not buy sign. I don't know if that makes sense for you. Make completely sense for me. But that just says to stop. Stop right here and don't do anything. Let market maker do whatever they want to do. Manipulate as much as they want. They'll show you what's up by crossing it. And in this case, cross happened end of the week. Better. Why better? Because you already know in the next week what's up. You just gonna put your cross here, and then me put these little planes here for myself. This just gonna tells me buy or sell. This webinar, this Zoom is being finished. I'm gonna just send you another one not right away. Let's give it 10 minutes break, guys. It's Sunday. Let's have fun. So see you guys in 10 minutes. All right, so you see that we are in the downtrend. Monday, the gap again, fill the gap, and where is the price right now is on 200 moving averages. We expect them to come and stop hunt the sellers of the last 2 days of these here, they're here, you know, they already got stopped out in my mind when the market is down. But let's say people start selling here by these EMAs, so they gotta come to stop on them. Or there is of course buyers too when they see this, so they have to trap them above the moving average, you know, giving them the same, you know, same thing we take, you know, buy a sell candle, or they wanna buy a buy candle or whatever. Price is above moving average, comes down, go right back up, pin bar on the moving average, trading candlestick Bible. That's our sell right there. Stop hunt on the Mayo. We go for 60 pip, done, and of course more, always more. 100 pip. That's actually the kind of trade I wanna marry with them. You know, it's like so cool. We move on to the next day. We look for a Tuesday reversal that comes above the Mayo or around the Mayo, give us a setup. So from here, I have these lines, I have these positions ready for you. I'm just gonna keep going through that. Why did I sell here or there? By now you should understand it. Why did I sell here? But I'll go through it. So here is an M formation. There is a big chance you guys, sell here and then get stopped out. That's probably the reason they came back up here. Or, to grab some orders of retail trader wanna trade this break to the high. Okay, so you know already the reason. These spikes, if you showed up here, these spikes will tell you that I'm gonna come down, right? So that's right here, our confirmation. That's a railroad, and you can sell here. That's the kind of entry you should like, because it gives you the lowest, kind of like tightest stops. That's 15 pip I'm showing you, but you could have survived with 3 pip. Like that's 3 pip up. So let's say you 5 pip, you'll be good. 10 pip, you'll be good. 15 pip, you'll be good. My 20 pip also is good. The reason I choose 20, because in case of a good setup and like one last spike, especially in GBP pairs, I wouldn't be out. So that's another 120 pip right here. We move on to the next day. Price after the London comes back to the Mayo, buy a sell candle. See, this is the type of trade, a safety trade. You can go by 20 pip stop loss, whether 10 pip stop loss, a small position. And when the price is below this moving average now, especially this little one, I hope you can see it. This little guy right here, respecting the 800 blueberry below all these EMAs, it's the best buy sell candle. This is the one. After this setup, this is the one I personally, if I see this, I already know I go crazy. I put all my accounts in. I don't recommend you to do it, but if you want to do it, join me. So this is 85 pip. You can come exactly on my monthly level and catch 86.9 or 87 pip, I think. Yeah, 87. No. Now, yes. Okay. So that's the reason I took this trade. We move on to the next week. You see, that's a perfect W on our monthly level. And we are in the Wednesday, which is we expect a Tuesday reversal. It's all good. You can take this. It's another, 80, 100 pip. And if you swing it, it's going to be even more. But no thanks from me. I've been there. I got caught a lot here. So I rather be friend of market maker. I'll get this 87. I be out. And I come back to the next day. So I see this midweek reversal happen. This midweek reversal happen, and prices above moving averages. I don't buy until I see a cross, which I see a cross here. You could have been caught. You could have, buy this, any of these. You could have catch some pip, but not a really good one. It's okay again to lose. You can't be right all the time. They even trap us by this. I remember this day I didn't get trapped. I kind of remember I saw this, but we didn't get trapped. We were proud of ourselves. And yeah, I just remember it. So price came back up, came all the way up here, made an M formation with the engulfing candles. We sold around here. That time we used to go like counter trend too, but it wasn't really a counter trend. But you could enter here, you could enter here, or the best thing we will do from this week, I personally gonna do is wait for this cross. So in this particular week, market came down to here, and that's probably a news that jumped it all the way up back there. Let me see if I can catch that. No, not really. It wasn't the uptrend, but that was a news of the monthly level. They came here, made a W. Still, we have reason for this. We know why this happened. They came here, trapped the sellers, go below this, made a W, and came right back up. Hit all the stops of the sellers on here. They came right back up in where the price was at the end of the week, right? So that was kind of a choppy week, but we still can make money, and we will always. Week is done with the cross. I'm just gonna remind you guys again that this is just one pair. It's not there's no way you can catch a trade every day on every pair. So these 2 days, remember, if you don't be selective and you don't wanna, you see the EMAs are flattening out. You don't see an expanding of EMAs. If you choose to trade these, there is a big chance you give back all these profit you catched here. So that's a power of being selective, power of waiting. How many of these setup we took from our Mayo? All of them almost. So this, you could have catch it. If you didn't catch it, that's okay. Last 2 days, you could have go trade another pair that was around the Mayo. And it happens all the time. Just learn to be selective. I'm trying to learn myself. It's not like I'm done with all of this. I'm trying to learn myself. Always you have to learn if you're a trader. At least I think. So price made a high. You see the news came up, trapped so many people right here. And that's the highest point they made. Amount of trap was so high, they didn't even come back around it for like another couple of days or for more than a days. They didn't even come to here. So you see, that's technically, if you go to the macro view, that's technically a big ass stop hunt and M to the Mayo. Let me just zoom out. You'd have the eyes to see it. That was a downtrend from this plane, and this was just, they used the news for a big spike to the up to stop hunt. Everybody's selling here because they had planned to drop it, but not when everybody knows that it's going down. So that's how you can see on your Monday. But you see how we're gonna catch all these cells right here. So right here we have this, not much. You can count them, but it's okay. Not a really big touch and spikes and come back. They got the traps that they wanted here. Probably it was a liquidity zone or whatever hell that was technical wise, but that's why they came here. So they go back in the Monday down. You see the cross. We look for sell. You could, do ECR on this. Not recommended by me. You wait for the next day. Price comes to Mayo. Have a, saying hello to Blueberry too with the spike, probably because so many of you guys catch this M, and they give you this M with these railroad tracks, so you sell and they spike you up. Sorry, they stop you up. They spike up and stop you up with damn 85 pip. That's probably a news. So the news stop hunt happened, M formation. You could enter here, you could enter when it comes below the 14 EMA, you could wait, you know, even here's anywhere, you know. You saw the stop hunt happen. Now everybody was thinking it's going down. Now they're stopped out and they're thinking it's going up. So now it's time to that you sell. You sell any of this. Let's say you sell this. 20 pip, 60 pip. You catch it in Asian session. So, but this is where you heading at. Minimum 283 pip for this monthly or daily level. That's powerful. That's really powerful if you wait for it. If you just wait for it. If you didn't feel like holding your trade, you can catch your, I don't know, whatever pip is here. It's like 37, 50, 60, I don't know, something around here, 40 pip. And then the next day, when you see EMAs are expanding, you buy a sell candle or sell a buy candle, depend on where you are. So in here, for me, when I see they're getting closer to 50, it's better like this, you know, any of these, like this, you know, you can get it. Or these are even better, and you see this big drop. So you can catch the 40 pip over there, and you can catch, let's say you entered here, worst place possible in the 14. Still 20 pip, 60 pip, you get it, no problem. Another 190 pip, let's call it 200. I love it. Before the day close. And then we move on to the next day. This shit happens over and over. Goes to the Mayo. Just gotta wait for the Mayo. You know, you can take the 100. You can say it's above. You can say it's like M pattern happened or whatever. And at the time you catch 30 pip. But trust me, it's better to wait for them. They will come eventually to these Mayo. Day 1 or 2. If they didn't come, you know, one day, the second day they will show up. And that's where you buy, where you sell this buy candle. And you get 120 pip out of it. Easy peasy. Tamam tamam. Another day, Friday, M sets up on our Mayo. You could catch it right here, go home by here, or you can wait for this fully M happens and set it right here, 60. I think that's around 40, 50 pip too. For a Friday, you shouldn't be greedy. We go to the next week. You see, we're still selling. How can you have the confidence of selling in a market like this? You know, you can't. If you're like following the retail shit, you go to 15 minutes, you find it, it's uptrend. You go to 4 hours, it's a downtrend. You go to daily, it's uptrend. What the fuck you want to do then? But now, for us, it's just we selling unless it crossed back. So right here, did it cross? No. So what we do? We sell. Tuesday, EMA is expanding. You can sell it. These are not like 100% trade. I put it here just to show you that you can catch 110 pip that easy. Cross, EMA is expanding, selling it. 20 pip stop loss, not gonna kill you, right? And then price make this low and then move it up. Once you see the price is moving up like this and running away from, like you're running away from where the price was at the lowest, just that's telling you that there's a possible peak formation low. You can just draw these lines and you figure it that maybe it was or maybe it wasn't, you know. So let me see if that was. Yes, it was. So you see, it's Monday, Tuesday, Wednesday. You just know the way that they work it out. If you know the structure, you know, like you see the signs. You don't trade anyway to 10 hours from here. That's London session, right? So in 10 hours from here, price is above moving average, is going up. So you can take this M and just lose if you don't pay attention to this, you know? Again, I'm telling you, losing is fine. It's okay to lose. So price crossed again. We're looking for buy. When you buy, you can buy this, but that's Asian session. I'm not in the market. So when the market comes, sorry for the dog. So when the market comes in 10-hour, there is no point for you. After you see this, there's no point for you buying it here, right? Because you want to stop hunt. So market vector 3 candlestick to blueberry to the 100, the 14 made that W right here, a bigger one right here. You could have buy here or here. Doesn't really matter. But if you couldn't catch this, don't just jump in here. You see a big momentum candlestick from for the retail traders, and you see the consolidation. It giving them buy signal. Why should you buy? As I said at the beginning of the webinar, don't follow. Do not follow. So that's another 200 pip in one day, which is pretty good. And we know that we look for buys. You could buy this, you could buy this and make some money. But it's Friday, don't expect to be perfect, right? Or if you had swing, you see all day was consolidation. Not every day is not every day is the best great day for trading. So week is done. We go to the next week. We still look for the buys since there is no cross and EMAs is still far from each other. You see the price is coming down to the monthly level and then goes back up, comes back down to the monthly level, and the Mayo make the second leg of the W. This is maybe not the clearest W you can find because, like, you know, it's the same high made or whatever. It was a weak fill as well. We care about our mayonnaise, right? So right now, that's the best buy from this sell candle below this monthly key level. So it's just everything in line with your structure. That's what you're looking for. This is another trade of some couple of 100 pip move you could catch. 261 pip, but as you see, I divided by 3 different trade that I got it. So the first one is here. That's giving you, oh gosh, that's 120 pip. Next day, price comes down. You could have get this. I think with 20 pip stop loss, you would have been out here. Oh no, that was still okay to enter. Okay, better. But that's a better entry in my mind. So you can enter here, catch another 100 pip. So 100 and 100, 220, sorry, 220 pip. And next day, same thing. You see, you usually can see these and M on the daily level that comes down. We can catch this. But if you rule yourself, you wouldn't. You wait for this to come to our Mayo and another scenario exactly like this and another 90 pip. That's simple. So what is it now? Monday, Tuesday, Wednesday. What do we look for? Tuesday, midweek reversal. That's kind of our high, peak high that is made. we had these tabs on here, right? And in here, price comes down to Mayo. Once you see this, as a, that's repeating again. We are stop buying. It's not that we sell. We just stop buying. And then you don't buy here. You can, but you better not. And you see EMAs are coming together. All EMAs are crows together. At the last hours, we had a cross right here. We had a cross right here, which tells me for the week coming, this is by the way, end of it. That's like November 9. So it's Friday. That to me is waiting in Monday for the price to come back to the Mayo, and I sell out of it. Let me make it red so you don't get confused. Yeah. So we look for sell right here. That's pretty much what I made it ready for you guys today. Let me one more time go through this tools. I'll explain you again. So you see the most of the what I use is I look at the weekly cycle, I look at the key levels, I look at the EMAs, I wait for stop hunts, I try to identify trap zones. Not any of them individually, all along each other. And that's one more time if you want to write it down or whatever. Another time I want to thank Dylan, Brandon, and Mark English for the priceless knowledge that they shared to us, and I'm just trying to, you know, share it with you guys. One last thing I want to go through is just a mindset things. Just give me a second. I will be right back. All right, so I want to end this webinar by one amazing part of book Think and Grow Rich, which is just pretty awesome. I want to read it and then we're done. So it says in chapter 3, Faith, it says, if you think you are beaten, you are. If you think you dare not, you don't. If you like to win but you think you can't, it's almost certain you won't. If you think you lose, you're lost. For out of the word we find success begins with a fellow's will. It's all in the state of mind. If you think you're outclassed, you are. You've got to think high to rise. You've got to be sure of yourself before you can ever win a prize. Life's battles don't always go to stronger or faster man, but sooner or later, the man who wins is the man who think he can. So I hope it helped you guys in somehow. I really recommend you guys, if you don't know about the book Think and Grow Rich, make sure to read that book. Napoleon Hill is other. Thank you guys again for joining, and wish you a great days. Bye bye. Peace.